It's a mindset, that's all. So many people get into syndication, they concentrate on building a big list. Listen, before you build a big list, build a small, awesome list, right?
Mm.
I have my short list. I have a half a dozen people that I can go to if I come across an amazing deal. I'm going to call them, I'm going to give them a 2 minute, and they're going to be in or out. They're going to eventually want to see all the paperwork and write the whole deal. They're strong, sharp, smart investors, but they've earned a spot on my list and I've earned a spot with them. So it's the law of small numbers. You don't need mass marketing in the syndication business.
Tim is one of the most authentic and genuine people I've ever met.
Sincerely believe he's coming from a position of giving, and that means a lot.
You're going to make huge progress.
Welcome everybody to today's Capital Raising Show. I'm your host, Tim Mai, and today I have an amazing guest on the line with us. I've only started this show for a little bit over a year. Mr. Robert Helms, he has started his Real Estate Radio Guys show for 27th year now. Holy cow. Oh my gosh. Yeah, that's longer than I've been in real estate, which is a long time. So that's really awesome. And Robert is a professional real estate investor and also a developer as well in 9 states and 6 countries. That's a lot of countries. I think most of us, just here in the US, I'm excited to learn more about how development in other countries here work. Robert and his development companies have done over $800 million of real estate. He's also taught real estate practices and appraisal at college level. Did you also teach for TREC as well, Robert? Was that like a CE credit level?
Yeah, so I actually taught in the California system, and I was a professor at Foothill College. And I taught appraisal and real estate principles, and then I also taught for the California Department of Real Estate.
Gotcha. Very cool. Yes. And his podcast, the Real Estate Guides podcast, is one of the most downloaded podcasts in real estate. And it's heard in over more than 190 countries. It's a lot of countries. As you guys see, Robert has a ton of experience, in real estate and development, not just here in the US, but in all over. And with that, let's give Robert a big welcome, y'all. Woo-hoo! I need my I keep on forgetting to set up my mixer board to give you an official big clap welcome there, Robert. But welcome.
Well, it's great to be on. Thanks for your persistence, and I'm glad it finally worked out. This is a better day for me too.
Oh, perfect. Yes, that's awesome. Now, one of the things that you had mentioned in your bio, you started your first investments in 1984, but you didn't start capital raising until 2003. So I'd love for you to share with us a little bit about your background and how you got into this war of real estate syndications, capital raising.
Yeah, so the first attraction was just to real estate in general. They say that whatever you spend time doing between the ages of 7 and 14 gives you good insight into what you might be good at in the rest of your life. My favorite thing then was playing Monopoly, and I still do, I guess. So I was inspired by my dad. He had been a BSWE. He'd gone to work for a bunch of companies. He started his own company, but always on the side, he was investing in real estate. In fact, he invested in 7 different decades. So he was a great role model in that regard. And I remember being pretty young, and we were driving by a property that he owned. And I was trying to get my mind around why you would own a property that you don't live in. He said, well, there's a family here and they pay us every month to live in the house. I said, they pay us to live in the house? Wow. Well, how many houses do we have? And he says, well, quite a few, but we want more. I'm like, oh, wow. Jim Rohn used to say that kids should have 2 bikes, one to ride and one to rent. And so I pretty early got the bug and tried to figure out how I could become a young entrepreneur. And real estate just made a lot of sense to me. My very first foray into real estate, actually, it's kind of fitting today, is Tom Hopkins' birthday. Tom Hopkins, one of the most excellent sales trainers ever. How to master the art of selling real estate and how to master the art of selling Indeed. And my first week as a licensed real estate agent in California, my dad took me to see Tommy Hopkins. And at the break, we got his book and we went up to get it signed. And my dad said, Tom, this is my son, Robert. It's his first week in real estate. And he'd been teaching all morning. And Tom Hopkins looked me straight in the eye and he said, Robert, welcome to the business. You'll make a living selling real estate to other people. You will make a fortune if you become your own best client. And that was great, great, great advice.
I
Today,
love that.
Tom is an awesome friend, and it's I just called and left him a happy birthday message today because he's had such an impact on my life. But at first, it wasn't about raising capital at all. It was about, getting more rental units. And my original investment philosophy, flawed as it may be, was every time I buy a new house, I'll just keep the old one and keep it as a rental. And I did that for several iterations. And then a great friend and mentor of mine, Walter Sanford, said, Robert, why would you keep a house as a rental that you wouldn't have specifically purchased as a rental? I said, well, I hadn't thought about that. It was just a bird in the hand. And he said, you could be a lot more strategic with what you buy in terms of rental property. And so that was my mission, was to just learn more about it, get around people doing it. But for many, many years, I was just investing in my own account, like many investors.
I see. Very interesting. So when you got into capital raising, was that when you went into multifamily commercial real estate? Or was that what your transition out of the single family home rentals?
No, in 1979, I got my introduction into apartments because my dad and my uncle owned a 48-unit apartment building a block from the university that I was attending. And that whole summer, we just spent time, painting and cleaning and all the fun you have as a landlord. That didn't excite me, but what did excite me was the fact that they brought me on as assistant manager, and I got free rent in exchange for being the assistant manager at the building and doing some light maintenance work and taking care of the laundry equipment and painting a room now and then. And that was just a block from school. And that was my real introduction to that. We ended up with several apartment buildings, all of which we managed from that one office. In California at the time, if you were under 16 units, you didn't need an on-site residential manager. And so we had many buildings that were smaller, and we ran them from that location. So little by little, I learned more and more about managing investment property. When I got licensed, I bought my first income property with my first paycheck. I sold a property in Palo Alto, and I used the money to put a down payment on a duplex in San Jose. I lived in half and rented the other half. And from there on, I was just slowly getting into bigger units. And then we had in the family several smaller apartment buildings, 8, 12, 20 unit kind of buildings. But my first opportunity to be in a bigger property was 151 units. And for that, we had to bring in some partners. And that was really my introduction to what we would call syndication. At the time, it just seemed like you brought in more people to share the load, and did that in several properties. And then it all changed for me in about the early 2000s when I became a passive investor in some office condos. And I was not actively managing those. I was just investing some of the money I was making from real estate into these development projects. And lo and behold, this team that I found was amazing. They delivered a higher return than they promised in less time. And I was hooked, and that led me down the path of syndication.
That's amazing. Great. Yeah. I mean, gosh, you started real young and you got hands-on experience at a very young age. And we're going to go into the market cycle part of it here soon. But yeah, you've been through all of those market cycles from the the 90s to the 2000s, and love to hear your insight on what's coming up next here. But before we go into that, so share with us either this very first time where you had to raise money. What was that experience like for you? What are some of the challenges that you've gone through that that you learned that that really help you take your capital raising to where it is now?
Tim, that's such a great question, because one of the big hurdles people have when they cross over from owning into their own account into raising capital is the fact that they don't feel comfortable asking people for money. They haven't raised capital before. They don't have that background, and it all seems odd and different. And I had a little bit of an interesting situation because I was doing well in these passive investments, and I really like these guys. And I started just referring people and saying, hey, I got these buddies doing these projects. And one of the gentlemen at the firm, he sat me down and he said, I noticed that the last deal we did, we raised $600,000 and 550 came from you and people you referred. And it's like, well, that
Wow.
is crazy. In the end, I didn't get paid anything. It wasn't a brokerage arrangement. I was just telling people, hey, this is a pretty cool deal. And so he sat me down and he goes, I have another earmarked project, and I think you ought to be the developer on this one. And I'm just going to ride shotgun. And I go, I'm not a developer. What do you mean? I just am an investor. He goes, well, you've learned everything you need to learn. I'm going to be at your side. You already can raise money. And so we did that deal and we funded it pretty quickly. And from there, it became kind of our thing. And I all of a sudden wasn't selling individual real estate. I was devoting my time to, at first, syndication, really raising money for other people's deals. And then ultimately to figuring out development and that side of it. So it was a great education the whole time. And I just found out you get a lot more leverage. You can bring people along. So many reasons to enjoy syndication as opposed to just investing in your own account.
Right. That's amazing. Now, if we were to date back, like at that time, you would have already started your Real Estate Guides show. Is that correct?
Well, we started the show in 1997.
Okay.
So that was at first, just a little part-time gig we were doing on the weekends at a radio station in the Bay Area. And now it's crazy where it's grown 27 years later. When we started the show, we really thought, we outlined all the topics in real estate, title and escrow and legal and inspections and just all the things. And we thought, well, about 2 years and we'll have covered everything you need to know in real estate and we'll be done. And that was 27 years ago. So it's been a crazy fun ride.
That's awesome. So the people that were coming to you and you were referring them to deals and you were raising money from, especially in the beginning, did a lot of them came from the show, or did it came from just your personal network of investors back then?
Yeah, nobody came from the show. I mean, no
Ah,
one was
okay.
listening to the show when it started. We were on at a terrible time. And, what we did with the show to start with, I was listing and selling real estate, and it was a credibility page in my
Ah,
presentation. I would sit down to talk to a couple about listing their home. And one of the many things I would talk about is the fact that, hey, we have this radio show on real estate. And they would tune in and they go, wow, that's different than any other realtor I talked to. And it would give us the nod sometime. And back in the day, the show was just really about real estate, and specifically in the Bay Area. We didn't talk that much about investment. We certainly didn't talk about syndication. And so it was just people that we knew. Back then, we had a fledgling education company that we first started as a sound company. I did sound with my partner for a lot of other real estate events, since I was in real estate as an agent and I had a background in audio visual. We were doing sound for these real estate events, and that got me kind of in an interesting seat. And from there, we started doing some seminars. We were doing sound one day, and my partner says, you're better than this guy. And I'm like, well, I mean, I've done pretty well in my first few years of real estate. But so we started doing some continuing education classes for California real estate licensees to renew their licenses. And that started to become fun, and started teaching a little bit. And then the radio show opportunity happened, and I was just building up a database, a network. And back then, of course, it was, what we call a Rolodex, a file with a bunch of business cards in it, because it was in the early days of computers and all of that. So it was a very different world. And the idea to me of raising capital was simply sharing something that I was getting benefit from. I didn't ever think of it as a sale. I didn't think, I've got to get this money raised. To this day, that never occurs to me. I always believe in my heart of hearts that it's an awesome, awesome opportunity. And my mission is not only to share it, my mission is to make sure that I'm careful not to avoid sharing it with people that would benefit. And so it's a very different way of thinking. If you think I have to make, the sale, I need to raise $1 million for my deal, me, That's the wrong approach. It's never, ever about you. It's always about the
Mm,
capital and what the capital needs. And if you start to focus on the other person, then lo and behold, you get taken care of.
I love that. I love that. Um, so share with us, what is your current business model now? I know you have a lot of facets to your business, including your education business as well. I attended when I first got into this industry, the syndication industry, your events in Dallas, February of 2022 was my very first, I think, event that that I got started with. And so share with everyone a bit about your business model.
Sure. Well, the Real Estate Guys show is heard on the Salem radio networks, and it's free to listen to on the radio. It's free on iHeartRadio. It's free on Apple Podcasts, right? So we do a podcast for the same reason most folks do. It's a little different because our show truly is on broadcast radio still. So it sounds more like a radio show because it is a radio show. And then we take the show and create a podcast version with a few less commercials in it. And then the podcast, lives on all the platforms, and that's amazing. So that is the way people find out about us. But we do a series of events and seminars. When I met Russ Gray, my current partner on the radio, he's not always been the co-host, but he has for the majority of our 27 years. When I
Oh,
first
wow.
met Russ, we were thinking about, how could we do some more educational classes? Within 3 or 4 years, we were doing 60 to 70 classes a year. Day-long classes, evening classes, weekend classes, teaching on all kinds of different things. And those were classes people paid for. That was a profitable business. But that's how we built our list as well, as finding people that were interested in various things. And that was everything from understanding how to properly get into a mortgage to how to team invest, passively invest, in a syndication. We taught 1031 exchanges and investing with your IRA and all kinds of different topics. Today, it's not like that at all. Today, we do maybe 7 or 8 events a year, and that's plenty. The syndication event is kind of our cornerstone teaching. The secrets of successful syndication, we've been teaching twice a year since 2011. Got one coming up the first weekend of October. And it's 2 days, and it really is designed to teach you soup to nuts what you need to know, not fleshed out at the level you need to know it, but at least someone can come and get, a flavor for everything involved in syndication, from the legal side, the marketing side, the deal side, the capital raising side. And Tim, you've been to that. And then we have a couple of other events that we do. Our annual Big Investor Summit. That's like our big event of the year. It's like a summer camp for the affluent, a lot of fun, a lot of amazing speakers. We do a sales program, how to win funds and influence people. We do our annual goals retreat at the beginning of the year. And occasionally we do market field trips where we go in and look at markets. So we don't sell property on those field trips. It's more just to kind of understand the market and believe that, there's a lot to learn about a marketplace before you pull the trigger. And so the trips are just as much about that process as they are about the specific market we might go into. And then, independently of that, the stuff we don't talk about on the radio is we have a development company, and I've been doing real estate development now since 2003. I was one of those guys who raised the money for our own development deals, and we still do that today. So I don't advertise that. If you listen to the show for 10 years, you might not know that we do that in our real lives. But that's our primary business in real estate. And then we own, real estate as landlords, which I'm a collector of real estate. So, and always will be.
Yeah, I love that. A collector of real estate. I like that a lot. It's amazing that you do this development, and obviously you have to raise money for the development. You have to sell the development, but yet you don't advertise that on your show. I'm curious as to why not. Yeah.
Yeah. I had a sales guy in one of our projects say, "Hey, I was Googling around and your show's kind of a big deal. And I was thinking if you went on the show and said, hey, here's the greatest real estate deal I've ever seen, and you just put my number out and I'll take the leads." And I said, yeah, I could do that. And we would sell a lot, and my reputation would instantly crash and burn. So for us, there is a firewall between what we do in our personal real estate investing, including development, and what we do to educate people. Only thing gives me
Interesting.
credibility is that I have done a lot of these things in real estate. I don't just talk about it, right? I've been in the business a long, long time, lots of doors, lots of money raised, lots of development, lots of different countries. But that is not the tool of the radio show has nothing to do with us raising capital. And it's a fine line. I'm not saying it's the only way to do it, because there's a lot of shows that are about getting you to invest with the person. That might work for some people. But that's just not our style. So we keep those two things very separate.
Very interesting. Okay. And then what about, you do a lot of education outside of the show, you do a ton of education. Do you raise money from your students at all?
Yeah, so good question. We have our events, obviously. By the time you cross over from being a radio listener to come to an event, that's one more level of engagement if I've seen you and met you in person. But when you raise capital, you have to have a substantive relationship. We take that very seriously. Met a gentleman yesterday at the event that you and I were at who had been on one of our field trips before COVID. And I remembered him well and remembered that he was much more interested in passively investing than actively investing, and was asking about one of our projects. And he said, is there still availability? Is there still opportunity? So that's the perfect situation for me. We don't ever outreach to people and say, hey, invest with us. What happens is over time, you get to know people, they get to know you, and they say, hey, do you have anything we could invest in? So
Right.
I'm always going to have it be that way. I'm never reaching out to people. Now, I'm not suggesting that, because if you're brand new to capital raising, a big part of our teaching is build your brand, build your network. You've got to develop what your story is, and you've got to get out and share the word and meet people and add them to your list and get into those relationships and so on. But because it's kind of a unique situation for us with a big radio audience, we just have never wanted to take that audience and raise capital with those folks directly.
Yeah.
You get to know us, by the time you come on our summit, hey, we might do a deal together. But that's definitely when we have established not just a paper, but a real relationship. If I don't know your name when I see you, then you're probably not invited to invest with me.
Gotcha. That's good. Now I know, I've been to your event, so I've met with some of your students and members of your network, and they've raised a lot of money. I mean, your network probably raised, I don't know how many billions of dollars in retail capital. Forget about institutional capital. Just the retail capital is a lot of money. Can you share with us what are some of the top ways that maybe the top 3 ways that you see from your own experience, from your students' experience, of what's working well right now when it comes to raising retail capital?
Yeah, it's a great question, and there's as many different ways as there are investors. Some people, are introverted, and they're not necessarily going to be the glad handers that go out handing out business cards. And still, one of our, probably the most shy person I know, has raised $25 million so far.
Wow,
So I always
shy
say,
person.
yeah, he's terribly shy, engineer by trade, like terribly shy, but he's figured out that being shy doesn't serve him, and he's raised $25 million. We have 2 students that have raised over $1 billion each that we
Holy
know
cow.
of. So there's 2 guys, $2 billion. That's pretty good. Got a number of people that have raised 300 million, 400 million, 500 million, and dozens that have raised 100 million. And what it is the thing I observe the most is that you have to break through the natural barrier. And the natural barrier I'm talking about is once you've talked to everybody you already know, your existing database, people that know you, like you, and trust you. Once you've talked to all those people and they either said yes or no, now you hit this barrier. Now you're forced to go outside of your natural network and create a bigger network. And that's where the magic is. And they say the best time to make a sale is right after somebody said yes. In the old days, people would dial for dollars and they make 100 sales call. And when they get their yes, they would hang up and go home. Well, what you really should do is when you get that first yes, whether it's 40 or 50 calls in, now you've got momentum. You should pick up the phone again. Your energy's better, what we call your music, right? There's your words, what you say, and there's your music, which is the power behind it. And so there's lots of different ways to raise capital. I'll give you a couple of tangible examples of ways people have done it. We have a project that is in another country, and we have our top money raisers. So it's a little different model that we didn't raise the capital. Instead, we built the real estate and offered for other people to raise capital. The guy that raised the most, more than $25 million just on the one project, his way was pretty interesting. He came there, saw the market, and said, wow, you can't really appreciate this place unless you see it. He said, would you be open to having me bring down a bunch of people and you show them the marketplace just like you showed me the marketplace? And we came to an arrangement on that. And so it got to the point where after about 4 of those trips that he was on, he said, well, hey, can I just send my people even if I'm not there? And we had developed enough rapport that it was like, yeah, so that was a tremendous shortcut. And to this day, he does those kinds of things. He goes and does day-long trips where people can get on a bus and go see the real estate themselves, as opposed to just buying from a prospectus. Takes more time, takes more commitment, takes a little more capital to do that, but it ingrains people into him when he gets to meet their teams on the ground, get to kick the dirt, get to spend time with him as a person. Then we've got another student who has done an incredible job of building up a podcast, and he's created an investor club within his podcast. So it's not part of the podcast. It's a separate thing you sign up for, and you have to be accredited. So it's just this little barrier. And he started with 7 people, and today he's got, hundreds of people on his accredited investor list. So that's another way. I know a lot of people that go out and speak, whether it's on podcasts or live events or virtual events, and they're out there selling. They're just giving a ton of value. And then at the end, they give their contact information, or they say, if you'd like to learn more, I've written a free report. If you listen to our show, we love that technique. We have a great guest on, and you can't always get it all in one listen, or you're driving or working out or something. So you send an email in, you get a free report that has more details about it. It also has their contact information if you're interested. So I think there's lots of ways to do it. I'm a big fan of getting face-to-face. That's why you see me at so many live events. If someone invites me to come out and I can make the dates work, I'm going to love to be there. And I think it's just trying to, connect dots for people. Plus, I think you meet super cool people. Like this weekend, the event we were at, I got to hang out with all the speakers and met a couple of people for the first time, and have already been following up. And, you just continue to look for that synergy, the Venn diagram, the overlap, where you have things in common. And there's so many ways to do it. But the most important thing is that you do it, is that you make an offer, is that you invite. And it gets easier and easier. The first $1 million you raise is absolutely the hardest. And from there, it gets easier and easier and easier. I will say I find it easier to raise $250,000 at a time than it is to raise $25,000 at a time. So if anybody's out there with a $10 or $25 or even $50,000 minimum, I would just say step it up.
So I love that. And I'm speculating why that is, but I'd love to hear it from you. Why is it that it's easier to raise $250,000 versus $25,000?
Yeah, here's why. The folks that have $250,000, they understand. They have they're probably accredited, but they have a good sophistication level. They can make good decisions. All the reasons why the SEC has the rules they do are to make sure that people are suitable, and someone with the right suitability. They're going to do all the homework up front, all the vetting, all the hard questions. They're going to look into the deal. They're going to do due diligence. Once they've decided, yes, now you got them, as long as you don't foul it up. Right? If you stay in good communication, don't mean you have to overshoot the pro forma. We can't always control that. But if you have good communication, and if there's a problem, you let them know. And if you are Johnny on the spot when they have a question, right? That's how you build up an investor like that. And I'll tell you what, those guys have friends. Now, the $50,000 or even worse, the $25,000 investor, no disrespect to anybody. When I started out in syndication, I said specifically to Russ, listen, my goal isn't to turn millionaires into billionaires. I want to show ordinary, everyday people how they can become millionaires. And I believe that there's a reason people aren't millionaires. Even though I have a big heart for them, the podcast is free. We have lots of great resources. At some point, you don't want people in your deal that really can't afford to be there. And I found that the person that puts a very small amount of money in is the hardest person to deal with. They have the most questions. They're not as sophisticated. As syndicators, we have to be very careful never to take too much money from one individual. You don't want to take too much of their liquid net worth or their liquid capital. You don't want to take too much percentage of their net worth. You want to let them put their toe in the water. That's important for them. It's important for you. Once you develop a rapport and a relationship, well, then things can move along. But I just think it takes a lot more work. It takes work at first to get a $500,000 investor. Don't get me wrong, it takes work. But once you have someone like that and you earn their respect and trust, they'll stay with you for a long time.
Right. I love that. I love the way that you share that. And I know in my experience, the people with bigger amount of money has a bigger pain to put those money to work, much more so than, yeah, they're the ones that bang down your door. It's like, do you have something I can invest in? Yeah, much more so than the people with the small amount of money. You had mentioned about one of your students doing the podcast and having the investor club for accredited investor. I like that idea a lot. His particular club, is it a free club, or did they pay money to be in that club?
That's a good question. It's for free. You have to do an interview with him and you have to fill out a questionnaire, which is basically a suitability questionnaire. And he doesn't charge anything for you to be on the list, but he makes it feel, and it is very exclusive. You have to have a one-on-one with him, and you can't just send in your answers. But before you do that, you have to fill out a lot. Sometimes he doesn't take the one-on-one based on the answers. But I've seen it done the other way, where people have a club that they charge for, and that's fine too, right? It's whatever gets you into that pool of people. If I'm the passive investor, which I am a lot today, I would much rather invest with somebody else than do all the work. Right. My favorite thing to do is to give one of those young bucks the ball. Right. But if you're a passive investor, it is critically important that you are vetting the sponsor, vetting the deal, doing just as much work. It's passive, but it's only passive after you write the check. Before that, you really do have to dig in and check it out. So if the way to get on that list is to spend some money, great. If it's to just be a good referrer, or whatever the hoops are you have to jump through. So I don't think there's a magic formula about it, but I do think that what you're trying to do is, of all the people out there, focus on the most serious. One of the things I'll say, you probably heard me say this from our event, we have 300 people in an event, and they paid on average $1,500 to be there. I'll say, if this event was free, we'd have 1,000 people. Or if it was $200, right, we'd probably have 500 people. By raising the price, then we only get the ones that are serious. Right. And in that 1,000 people, there might be 300 that are serious. Well, you raise your price. So there's lots of tools you use, right? So it's philosophy. Some people do free seminars. If you're going to a free seminar, the sales pitch is coming. It is. If you pay $1,500 for a seminar, it's not likely to be the same. So it's not right or wrong, by the way. You just got to figure out what works for you. I think syndication is a business of small numbers. I don't think you need 1,000 people on your list. We have probably the most extreme is I have one student who has one investor. Every deal he's ever done, more than $20 million, he's done with one guy. Now, that might sound really great, but here's the problem. What happens when something happens in that one guy's life? Because this particular investor who invests with our student, it's not the majority of his capital. It's a small part of his capital. And to his credit, our investor our student has done a great job of cultivating this relationship, earned his trust. He shows him a deal, and the guy either says yes or no, and it's usually yes. But the exposure you have with just one client is you're out of business if they go out of business. The other extreme is mass marketing, where you try to get a list of 100,000 people. I think a great syndicator can make an astronomical living with 50 clients.
Wow. Yeah, 50 accredited investors.
50 of the right accredited investors, 50 of people that understand times are good, times are bad. When you do really well, they do really well. They share the reward and they share the risk. You get 50 of those guys, but you can fund almost anything you want to fund.
Right. I like that. And 50 is so much more manageable. Like you can actually follow up with them every week. Right?
You
Like
could.
yeah, you could, yeah. I like that. I like that a lot.
It's a
Um,
it's a mindset, that's all. So many people get into syndication, they concentrate on building a big list. Listen, before you build a big list, build a small, awesome list, right?
mm,
I have my short list. I have a half a dozen people that I can go to if I come across an amazing deal. I'm going to call them, I'm going to give them a 2 minute, and they're going to be in or out. They're going to eventually want to see all the paperwork and write the whole deal. They're strong, sharp, smart investors, but they've earned a spot on my list and I've earned a spot with them. So it's the law of small numbers. You don't need mass marketing in the syndication business.
right. Yeah. So let's talk about today's market and the how the market is both from a mindset perspective, what the passive investors are thinking, looking at, and then also to how that relates to raising money from them right now. I know I hear, and even myself too, in my own deals too, right? Raising money in today's market this year has been much more challenging. So can you speak into that and how to overcome that for our passive investors?
Absolutely. It's a great question. Today, people are skittish. There's no doubt about it. It's harder to raise capital today than it was last year or 2 years ago or 5 years ago. It's not the hardest it's ever been in my career,
Oh,
but it's hard. It's on the harder side. Kenny McElroy and I were talking the other day, and Kenny goes, you know what I figured out is during the time you and I have been investors, and Ken and I have been investing about the same amount of time. We're almost the same age. We're 2 months apart. He's my younger friend. And he and I have been investing for about the same amount of time. He had calculated that the average interest rate during our entire investment career is higher than the current rates.
uh,
That's just a paradigm for you, because I know if you've only invested for the last 5 years, you think that today's rates are crazy high, but they're really not. We need normal rates to ever develop a normal market. I'm not sure that we will again, but the reality is people are just more careful. They're unsure, and uncertainty is difficult when gas prices are up, but the president is saying, no, everything's great and we have the strongest economy in the world. And they go to the grocery store and it doesn't feel like that. That's just an incongruence that has people waiting. I said on Friday that think and do is always better than wait and see. But think and do doesn't mean you're just always doing deals. It means you're being strategic and intentional about it. You aren't just saying, well, I'm just going to wait it out. So investors, by their very nature, need to get their money to work. Like you said, the more money they have, the more need they have. That's absolutely true. And it's true for banks. Banks have it in their charter to put capital to work. It does them no good if they don't put it to work. So we often think, banks are trying to be difficult. They don't want to give us the money. The opposite is true. They are difficult, but they are being careful because they need to get their money to use. So here's the mindset that I find helpful today. Real inflation is a lot higher than CPI. Real inflation, that includes everything in the real world, feels more like 10 or 12%. Don't take my word for it. You figure out in your own household budget how much you're spending on your air conditioning and heating, how much you're spending on gasoline, how much you're spending at the grocery store. You figure it out. But the real inflation rate is, say it's 10% even. Well, here's what I know. If you stay in cash, Mr. Investor, and you don't invest in anything, you are guaranteed to lose 10%. So your mission today isn't to try to hit a home run, knock it out of the park, crazy 22% annualized IRR. No, your mission is to tread water, to put your capital into something that is safe and proven and has mitigated a lot of downside and earn 6 or 8 or 10%, so you can at least stay even with inflation. Then if the deal poses the potential for a 12 or 14% return at some point, or upon a sale realizing some gain, then that's just a bonus. So you really do have to get them to think differently. Now, you can't make them wrong. Here's one of the big mistakes that syndicators make. They get all enamored of their deal. They get all enamored of the whole art of capital raising. And then they sit in front of someone and say, basically, let me paraphrase. Oh my gosh, you're in the stock market. You know how much the stock market has lost? That's crazy. You should be in my real estate deal. But remember, everything that they've invested in is a decision they already made. So when you berate them for being in something that hasn't worked out very well, you're adding insult to injury.
Mm,
Instead, the question mark is your friend. Hey, how did you decide on that stock? Hey, how's it gone for you? If you could go back, what would you do differently? Just ask some open-ended questions, get
mm,
them talking, and then how have you accounted for inflation in your portfolio if you're sitting in cash? And they say, well, what do you mean? Well, every week stuff costs more. Have you noticed that? Have you flown on an airplane lately? Have you stayed at a hotel? Have you been to a conference? Have you noticed what's happening to prices everywhere? They'll be like, yeah. So every dollar you have is losing value every day. What's your strategy? That's a very different way to approach
mm,
it. But that's the mindset people need to be getting. You have to what we call disturb the status quo. If doing nothing is the easiest, they'll do nothing. So you have to help them to feel uncomfortable about doing nothing. Because in
mm,
hindsight, they'll probably regret it. Wait and see hardly ever works. There's no place in America where if you sat out the real estate market for 10 years, you're in better shape. There's nobody who sat out Bitcoin in the first 5 years who's in better shape now, right? Wait and see is not a good strategy. Every minute you wait, every dollar you have is worth less.
right. And that's so good. And I love how you ask them questions to get them to think for themselves.
Bingo.
Right. Yeah, like that's so good. You can't just tell people because I know like me and my wife, if I tell her, she's like, you trying to tell me what to do? And she's like resisting it, right? And so I love the way that you're doing it with asking these open-ended questions and asking them questions such that it really gets them to think. They feel like they came up with the answers for themselves that they should do something to hedge against inflation, right?
It's so
Um,
much better if they make it for every reason. It's respectful. They come to their own conclusion. It's stronger when they came to it. There's an old saying that says, a person convinced against their will is of the same conviction still. You can't talk somebody into investing, nor should you. You're just there to offer an alternative. If they say yes, awesome. If they say no, awesome. It's never about you. It's always about them. The offer is just as good. One more philosophy is this. Imagine there's someone on your list that you want to call about your deal and you're hesitating for whatever reason. Ask yourself, how's it going to look in 10 years if your deal does everything you think it will? And you see that person at a cocktail party and you didn't invite them. Or they hear about the deal you did and they said, well, you never called me about that apartment deal. And it's done amazingly well. How will you feel? So I found it was much easier just to make the invitation and not be attached to the outcome. If they say no, no problem. At least you asked. The minute they said no, you're off the hook. If your deal goes on and does incredibly well, great tax advantages, it triples in value, right? All those things, they can't ever come back to you and say, hey, because you made the offer. If you didn't make them the offer, then they can come back to you and say, hey, what about me? I thought I was your friend.
mhm. Right. Yeah, I like that. So with your your developments in other countries, can first of all share with us what are some other countries? I know Belize is one of them because you
Yeah,
even
so
do
our
events
biggest,
there.
probably our biggest development footprint is in Belize. The first country outside of the US that we developed in was Mexico.
Mm,
And it was in 2004 when Las Vegas, Nevada went up 52.6% in median home price in 1 year. And I'm like, I don't know I don't know how, I don't know why, but I know it can't sustain. Now, today
mm,
I'm better educated, but back then I'm like, we got to find another footprint, another market somewhere. And we had been kind of courting, if you will, some real estate opportunities in Cabo San Lucas, Mexico. And that became a really good choice for us for a bunch of reasons. And if you're just passively investing internationally, or even more so if you're developing, it's just a big learning curve. Not to scare you away. It's a big, bold, beautiful world, and there's always opportunity in it. even when one market is crashing and careening, another market is just rocking. There's not been a time in history where every single real estate market is just going down. It's one of my favorite things about diversity internationally. If I'm in front of a group of people and I say, how many of you think it's risky to invest outside of the US? Well, a number of hands go up. And then I say, thank you for that. How many think it's risky to have all of your dollars tied to one nation's economy and currency? And a whole bunch of different hands go up, and sometimes some of the same hands. So I'm not even suggesting people diversify internationally. I'm suggesting you consider it because of non-correlation of assets, because of different currency risk, because of different economic risk, different policy, different political risk, and etc. But there's some interesting things about Mexico. Mexico is, especially Cabo San Lucas, like 36% of the people that visit Cabo San Lucas are from Southern California, not just California, Southern California. So it's very easy to get along there, as opposed to a place like Culiacan, Mexico, where nobody speaks English. So you're not going to get along. There's no tourism there, right? You have to be invited by someone basically to show up. So it's a relatively easy market. Belize is the only country in Latin America that speaks English as its official language. And so we say Belize is international investing on training wheels, because the contracts look the same. They're all in English. It feels very much like a US transaction. The third market I invested in was Australia. Now, Australia sounds like they speak the same language, but it's a little different and the law is a little different, but that's been a really good market for us. I will say that when you invest in a market like that, where you have exchange rate risk, which is true in a lot of markets, that can benefit you if you get on the right side of it, or it can be against you. It can be a headwind, and that's a hard thing to navigate. And so that's just one more thing you have to learn. You have to learn about the basis of law. But I'll say this, there's great opportunity in other markets, and there's a lot less restriction in other markets as well. Sometimes big governments put every impediment of the way of business owners as they can. I'm not saying that's wrong or right. There's probably reasons for it, but there's a lot less impediments in other places. You still have to do your homework. You still have to form relationships, and you better make sure you do that before you take an inordinate amount of risk. But to me, it's just a really great way to diversify. And then I like to invest in beautiful places. I like pretty real estate.
Yeah, it sure sounds like it for sure. Yes. The markets right now in the US versus, some of these other countries that you're in, are they all in a similar trend right now?
Yeah, so I think, they're all real estate's local, right? So at any given time, there are markets doing better than others, and it's always going to be that way. I think in the US, we have a couple of excellent tools that maybe we don't have in other countries. Like there's two tools that we can use right off the bat that will help us save a ton of time. Like, of the 50 states, there's definitely many I will not invest in. And the two tools I use are tenant landlord law. I'm only going to invest in places that favor the landlord. That's just a tremendous shortcut. And two, net in migration. Are more people entering the market or are more people leaving the market? Those are big, gross, calculations. But those two things alone put a bunch of places off the map and focus your attention on other places. And from there, then you look for where jobs are going and where trade is going and all those things. And insider information, although illegal in the stock market, perfectly legal and encouraged in real estate. Give you one of my key secrets is many marketplaces, an overlooked resource you have is the local Chamber of Commerce. Now, the Chamber of Commerce doesn't have anything to do with real estate. The Chamber of Commerce, their job is to attract business and capital and investment into their city, county, state. And in Belize, we have Beltrade, the Belize Trade Association. It's like for the whole country. And that's their whole job, is to get capital. But what they typically know at the Chamber of Commerce is they know what companies and what industries are considering bringing in factories, bringing in employees. And they're not necessarily going to tell you all of that on the first date. But if you get close to those folks, when we do our real estate field trips, we almost always try to get somebody from a Chamber of Commerce to come, because again, they don't sell real estate. They don't have anything to do with real estate markets. That's not why they're on the trip. They're on the trip to paint the picture of who's being attracted into this marketplace, not today, but tomorrow. And we have found out some amazing things over the years. You know, a factory going in with 2,200 employees. Is that going to make a difference in rental housing? You bet it is. Is it common knowledge? Nope. Is it in the papers? Not yet. You can find out some of that stuff ahead of time. We did a deal in San Antonio, Texas, and we were in escrow on a piece of property. And while we were in escrow, they announced that the off-ramp on the major freeway 3 blocks away was going to come on that street. Now that's been planned for 10 years, but it's not in the newspaper. You got to dig around and find it. We heard a little whisper about it, did a little research, found out this property is probably going to go up in value because of that, got in contract on it. And then while we were in escrow, it was announced instantly. The price was up at least double, maybe more, because of that one little thing. So in real estate, unlike other investments, like I'm a big fan of silver and gold, and I have a gold coin here that I love, and it's got no counterparty risk, and it is real money. But there's no insider information anybody has about this ounce of gold. The price is going to go where the market says the price is going to go, and the price isn't the value, but that's a discussion for another day. In real estate, we can exploit information, relationships, knowledge in a way hardly any other investment class can.
That's very good insight. Yeah, I've never even thought of it that way. So that's excellent. Thank you. In terms of where our market, real estate in the US market is going, what's your crystal ball is telling you?
Yeah, so my prediction is that prices will either rise or decline in the future. I think it's this way, Tim. Every dollar that anybody puts into a share of stock or an ounce of silver or a barrel of oil or a bushel of wheat, every investment dollar is discretionary. You never have to invest in a mutual fund. You never have to invest in diamonds, but you cannot sit out the real estate market economically. You don't have to buy a property, but you're going to have to interchange economically with real estate, right? That's what our tenants do. And I don't see a technology that's going to erase the need for human beings to sleep under a roof. Now, big picture is we're underbuilt. We do not have enough rooms at the inn. We've been underbuilt for a while. You saw some of the presentation from John Chang at Marcus & Millichap the other day. We're tremendously underbuilt as a nation, and yet there are new housing starts and so forth. So I think I'm bullish long-term for housing. I'm a little more leery of some of the other asset classes like office and retail, but in the right places, those still work. I'm a big proponent of agriculture. I love development where we're turning dirt into dollars. And it is very, very market specific. It's a time to be careful. So not the time to sit on your hands and do nothing. It's a time to be careful. And wisdom comes from knowledge, and knowledge comes from hard work. So you got to do the work to figure this stuff out. Nobody's going to wake you up in the middle of the night and hand you the perfect market to invest in or the perfect property. You've got to go out and do the work. But if you're not afraid of hard work, it's easy to find great marketplaces. And I have to define easy. Jim Rohn said easy means something you can do. Something that's impossible, well, that's not easy, but something you can do, like research the data and figure out net in migration and figure out where the new schools are going, where the new housing developments are going, where the new jobs are going. You can do that. And if you do, you'll be that much sharper than the next investor.
That's awesome. Love that. All right, Robert. Yeah, it's been a phenomenal interview. I love all of the wisdom. I mean, you come with so much wisdom, not just from your 20-something years, just the radio show, and even longer than that for your real estate investing career, and then the collective wisdom from all of your students as well. And I'm sure you learn, you get to see a lot more than what most of us could see. So thank you so much for sharing all your wisdom with us. For the people that want to reach out to you, connect with you, learn from you, attend your events, maybe even go check out your belief development, where would you like to send them?
So the best place to get to us is at realestateguysradio.com. So realestateguysradio.com. You can learn all about the show and see our free reports and resources and learn about the events, not just the events that we promote, but the events that we're invited to speak at. So we'll be all over the place. We'd love to run into folks like that. It's not a big group online today, so I'll tell you my personal email address, which I usually don't give away, but it's really hard to figure out. It's Robert at realestateguysradio.com. And we'd love to see you at an event. Love to see you, whether it's our event or somebody else's event. And sure appreciate the invitation. It's been great talking to you, Tim.
So Robert, again, thank you so much for doing this interview with me. I greatly appreciate you, greatly appreciate your time, and yeah, being on here and sharing your wisdom with us today.
Thanks, Tim. Thanks, everybody.